Is China's economic miracle unraveling? After years of enviable growth, China now faces massive obstacles, including overproduction, collapsing real estate, and youth unemployment. So does China's ailing economy threaten the very future of its Communist Party and the world as well? I'm Andrea Sankey, and today's Newsmaker is China. Since the late 1970s, China's Communist Party has overseen an unprecedented rise in living standards and economic power. But today, a number of analysts are warning that its meteoric growth could be a case of the faster they rise, the harder they fall. Once expected to bounce back after the pandemic, China is instead facing very complex challenges that put not only its domestic market at risk, but others who depend on it. Economic comparisons range from more optimistic scenarios like Japan in the 1980s, a country that eventually recovered, to more fatalistic forecasts like the USSR in the early 90s. Here's a closer look now at China's economy and where it could be going.
This is the result of the unique and probably fastest economic expansion in human history. In the space of less than 50 years, China has catapulted itself from nowhere to becoming the world's second superpower. When China's Communist Party took power after the Second World War, the country was still reeling from what it calls its 100 years of humiliation, a century in which the Qing dynasty disintegrated and colonial powers began dictating, annexing, and subjugating China. What followed was arguably worse. Chairman Mao's communist reforms led to the largest famine the world has ever known, with a death toll of up to 55 million people. And it wasn't until President Deng Xiaoping's surprise reforms in 1979 and the decision to open up China that things really started to change. Decades of explosive growth since have changed the country from an agrarian society to an industrial powerhouse. But right now, the situation is once again changing.
I think the economy is really under pressure. This year, it's really the case for everyone, whether it's businesses or individuals. We are really feeling that pressure. So much so that it feels even stronger than it did 3 years ago during the COVID pandemic. That's the general impression that me and all my friends have.
And while the economic growth slows, China's strict workplace norms, like the 996 culture of working from 9 a.m. to 9 p.m. 6 days a week, create intense pressure and lead to burnout, especially among young workers, increasingly uncertain about their future prospects. And it's not only the work culture. Each year, millions of young people compete fiercely to enter universities in the hope of finding skilled and better paid jobs. But with high youth unemployment, those jobs increasingly are not there.
I think most people will worry. Now there are more and more university graduates and there are fewer jobs left because of the pandemic. I think most people will be worried.
The real estate market, once the backbone of China's growth, now stands as one of its biggest weaknesses. Years of overbuilding have led to millions of vacant apartments and the collapse of major developers like Evergrande, shaking confidence and discouraging property investments. Meanwhile, China's export-focused economy is under pressure from increasing tariffs, especially in green economy sectors, as the country is accused of flooding foreign markets to stifle competitors. These measures are part of a mainly US effort to curb China's influence, weakening one of its most powerful economic engines. Beijing has long been fearful of meeting the same fate as the collapse of the Soviet Union. China's Communist Party has lasted 1 year longer than its Russian counterpart before its collapse, and it's determined not to end up on the scrap heap of history. So the question is, can China turn things around before the headwinds turn into a full-blown storm?
So China may have entered a period of economic uncertainty, but can it recover? Or are we seeing the proverbial beginning of the end? Well, joining me now to debate that and more are from Brisbane, Australia, Senior Fellow at Taihe Institute in Beijing and author of China, Trust and Digital Supply Chains, Warwick Powell. From Amsterdam, economist and author of Debunking Economics, Steve Keen. And from Beijing, journalist and founder and editor of Geopolitical Economy Reports, Ben Norton. Thanks all so much for being with me. You know, conservative analysts in the United States in particular say that this is the decade of China's decline. And they're pretty quick to point out that even using China's government-controlled statistics, you can see that things are getting bad. So, Steve Keen, is that true?
Well, it's true to some extent in the sense that China's been growing so rapidly for the last 40 years that it simply can't sustain that great growth indefinitely. A large part of it was bringing in Western technology and then developing their own capacity to create their own technology domestically. And at various times over the last 40 years, the rate of growth of the Chinese economy has been more than 10% per annum. And because there's such a low level of inflation at the time and low level of population growth, that's pretty much 10% per head. That means the level of economic output per person doubles every 7 years. Now, you simply can't sustain that indefinitely. If you look at the rate of growth during what we call the golden age of capitalism, the 50s and 60s in America, that was about 3.5%, which means you doubled the standard of living every 20 years. Now, that is the level that China might be tapering to, but it would still be a success compared to where America is right now, where its growth rate is down in real terms, down below 2%. So I think that's failing upwardly with an upwardly mobile failure.
An upwardly mobile failure. So when you hear these comparisons, though, to, you know, as I said in the intro, Japan in the 1980s, which eventually did recover, overheated for quite a few years, but then, you know, came back to economic stability and prosperity, more or less. Or those who say, no, this is the USSR in the early 90s. It indicates the collapse of even the Communist Party itself. Where do you see those comparisons?
I think the latter is a good cartoon line, because what went wrong with Russia was fundamentally the fact that it was what my old friend Janos Kornai described as a supply-constrained economy where demand was deficient. Demand was never sufficient to inspire corporations in production facilities within Russia to innovate, whereas the entire pressure of the Chinese system has been dramatic innovation. And the brick wall that Russia hit back in the 1950s was with no technological growth and population growth being the only way the economy expanded. That hasn't happened to China. It won't happen to China because, as you're showing in your side videos here, the emphasis upon China has been a dramatic increase in technological capability. The dangers that I see facing China aren't about its own domestic position. It's what global warming is going to do to the capacity for limitless growth on a finite planet. So that's the ultimate constraint that China faces, and we all face that constraint.
Interesting. Warwick, I wonder where you see things, especially according to what you just heard from Steve. And the environmental degradation, I've heard that at several points in certain analyses. Like, could that be the undoing of the Chinese economy?
Well, it's also creating a significant opportunity as well for innovation and revitalization. And, you know, I'll talk in language that no doubt Steve will be very familiar with, because in many ways, I think bringing this question of the environment and energy transformation into this economic development story is pivotal to understanding what's happening in China today and what the trajectory is going into the future. Economic systems are energy systems, and that's the way human beings are. And for the best part of 40 years, China's economic development has been underpinned by very traditional systems of energy transformation based primarily on fossil fuels. That, of course, created a whole bunch of adverse conditions, both ecologically and also within the ever-expanding urban environment, you know, with problems around air pollution, etc. And China realized that it had to make changes to the way that it underpinned its social economic settlement system, if you will. And that meant making the great leap into innovation around energy production, energy storage, and energy use. And that holds great prospects, I think, for China's own development. And provided that technologies are being shared, it also creates potential pathways for uh, better ways in which economic development can be achieved through more efficient and cleaner energy systems.
So, Warwick, just explain to me where you see China's position in relation to other economic powers in the next 2 decades.
Well, China will continue developing and it will pursue the objectives that it set itself, which is to become a moderately prosperous society by 2035. And I think achieving economic growth measured in GDP terms of about 5% a year will basically get you there. China has the benefit of being substantially larger than most other countries. So in that sense, it's always going to bring a substantial heft to the table. But again, you've just got to look at those images that you have shown, the observation Steve made before, which is the dramatic systemic features that underpin persistent innovation to drive productivity, to reduce energy, negative energy implications, to get more efficiency in that process of energy transformation. And all of these things, I think, are positioning China to successfully achieve the objectives that it set itself. Let's not forget that 70 years or so ago, China was coming out of over 100 years of warfare and exploitation with very little infrastructure, very, very low health infrastructure, low education. And in that period of time, it's got a population now that's largely literate, that has rising living standards, and I don't see any reason why that won't continue.
Yeah, and that's why it's called an economic miracle. I mean, it really is. It was way beyond anyone's, I think, basic expectations, especially at the time.
Look, I had family. Who I took refrigerators and televisions to in the late 1980s in southern China, and those devices were put into the welcome room, and everyone in the village was invited to come and have a look. And they only had to wait 2 more years before electricity arrived. So,
right. But,
the transformations have been dramatic.
Yeah, let me talk to Ben, though, because that, on the flip side of that, this is why some other more conservative analysts are saying, yeah, well, the faster they rise, the harder they fall. That this, this level of economic growth just isn't sustainable, and it's setting China up for an even harder crash. Ben, I know you are pretty bullish on the Chinese economy, but I mean, is there any, do you think, downside to this miraculous rise in such a short time span?
Well, there's certainly a lot more room for growth, especially in some of the less developed provinces, and the government in recent years has prioritized what it refers to as common prosperity and more even development, especially among some of the western provinces and some of the more inner provinces. A lot of the development has happened in the coastal regions where GDP per capita is actually similar to major cities in other developed countries. So now China is focusing on raising living standards in the less developed areas. So there's still a lot more room for growth. And I think another part of this discussion that's important to emphasize is how in recent years, China has actually kind of moved toward a new model of economic development, which is focused on what it calls high quality economic growth. So in the past few decades, China's economic growth has been amazing. Let's keep in mind that, 50 years ago, China's GDP per capita measured at purchasing power parity was lower than Haiti and lower than Sudan. And now it's 10 times larger than both of those countries. I mean, China's growth has been remarkable, driven largely by infrastructure development and moving up the value chain of production, starting at very low value added forms of industry and now at the highest levels of very high value added industries. So now the authorities have decided that they're essentially going to transition away from more infrastructure led growth. They already have some of the best infrastructure in the world, and they're moving toward what they call high quality growth. So their goal right now is not just to have the highest GDP growth possible, because you can have a lot of inefficient GDP growth if you're just building, a third airport and bridges that you don't really need. Instead, they're focusing on certain industries that are very important, that are strategic, like semiconductors, right? So you mentioned one of the potential downsides. Well, I think we're seeing that geopolitics is one of these downsides. We've seen the U.S. has been waging a trade war against China, and there's a lot of discussion of trying to essentially remove China from supply chains. And the
Right.
U.S. has really securitized its discussion of trade. So China's economic model in the past several decades has been really dependent on exporting to the US and also to a lesser extent the EU. And these are now markets where authorities, governments in the West are not as interested anymore in getting these manufactured products from China, and they're trying to find alternatives. So this is going to be a challenge for China going in the future. But I would say
Yeah.
that this is actually kind of an easier problem for China to solve because it has this massive internal market of 1.4 billion people, and it can raise their living standards and raise their incomes. And as it does so, you have more and more consumers who can buy those domestically produced manufacturers.
Okay. With that, though, I mean, the demographics and the consequences of, decades of a one-child per couple policy also come into the question. But let me ask Steve this question, according to
Well,
what
if I can jump in for a second on the demographic issue, this is an issue that's also faced by Japan, by South Korea, by many European countries. It's a problem that many
Sure.
wealthy, developed countries face. It's not just a problem that China faces. And I should say that, it's funny to me that people talk a lot about the demographic problem because at the same time, people are concerned about the loss of jobs with automation and robotization. And so it seems to me that these are problems that eventually will kind of be worked out, that as demographics do decline and you have fewer people of working age, you also have more and more jobs being lost to robotization and automation.
Right.
So I think this is a problem that's not unique to China, and I think it's a little exaggerated.
Yeah, and maybe from what you're describing, there could be an upside to it because there is more. Autonomizing these jobs is a serious issue going forward, in that there might not be more work created for a bigger growing population. But I want to go to Steve quickly and go back to what Ben was saying, because I guess the question is whether we're kind of seeing the end of globalization, that helped make China this huge economic power, and how does that play into the future of China's economic miracle here?
I think globalization is definitely over. China exploited globalization brilliantly. I will never forget meeting with the managers of the Shenzhen Free Trade Zone before it was constructed, where they said their objective was to get American corporations to move, to relocate to China and then re-export back to America. And the condition was that the Chinese company had to be a Chinese partner who in 7 years, I think it was 5 years actually, had to own 50% of the business, which is an enormous concession to the formation of a Chinese capitalist class. And they did brilliantly. They've taken the technology. They now develop their own national capacity to produce new technology, probably greater in China than virtually anywhere else in the world. So they've managed to bring that and make it a self-sustaining process. So but of course that now America's screaming. The one reason Donald Trump was elected is so many people have lost what used to be skilled jobs in what used to be the industrial sector of America, is now called the Rust Belt for good reason, and therefore that political reaction to the failure of globalization, in the sense that globalization is supposed to make everybody better off. Well, it made China much better off, and China was relatively careful to make sure the benefits were shared widely. American capitalists were happy to screw American workers, and that is now a large part of the social divisions in America. And that reaction to the working class being screwed in the first world, I think, is one of the major reasons globalization is going to come to an end. The other is the impact of climate change on supply chains.
Yeah.
And we've seen that with COVID in a small version.
Let me come back to
Yeah,
Warwick then.
I don't buy that. I don't buy that entirely. I think that there were problems for the American model because the finance capital basically screwed industrial capital and screwed the working classes who were employed there. There's no doubt about that. And in fact, the hollowing out of American industrial employment was taking place well before China began its rise as an exporting nation.
It accelerated that process.
In the US. Yeah, and but by and large, it was happening from the 1970s onwards. You'd be familiar with the literature as well. The changing patterns of global trade and investment, however, I think are going to see a shift in the contours of the way in which globalization works, and it's not going to have the United States or the European economies as central features of it, but we're going to see the ongoing integration of the markets of Latin America, Africa, West Asia into global networks, and of course, a tightening of the networks from a geographical point of view. So supply chains are not necessarily going to be as long as they've been, but they're certainly not going to be retreating into some sort of a system of lots of autarkic countries that don't have anything to do with each other.
As you're mentioning, kind of the decline of globalization as we've known it, which, the West became the major consumer of products from developing countries, mainly China. Now we're hearing more and more talk about the rise of the global South, and that perhaps China can replace these Western markets with its relationship with upcoming markets in more developing countries like Latin America, as you mentioned. So also the question of which products does China's production future lie, and in which markets will those go to? Will they go to the global South rather than to the West?
Yeah, look, I mean, Steve's right. China, over the course of the last 15 years, has taken very seriously the issues of fossil fuel-based energy sources and has been a global leader in the development and implementation of green energy. Now, that technology is being transferred globally, and that's going to assist global South countries, traditionally energy-poor countries, to leapfrog the constraints of fossil fuel-based energy transformation to hopefully a cleaner energy transformation capability. So I think that that's the first point. The second point to recognize, though, is that people often talk about China as having a particularly strong export-dependent economy. That probably hasn't been the case, really, in the scheme of its aggregate economic system for at least a decade and a half. China's manufactured exports as a percentage of total outputs, for instance, peaked at 18% in 2004 and has plateaued ever since, down to about 15% now, or a little bit lower. NEVs, new energy vehicles, is a classic case in point, where this year alone, the export to output ratio has dropped to just a little bit over 10%. We're looking at an environment where the domestic market is actually playing an outsized role, absorbing most of the output growth, particularly in manufacturers. So, I mean, the contours of globalization have changed. They've changed over the last 15 years. The markets of Europe and the United States are no longer as important relatively as the others. And those patterns are going to continue.
Yeah. Let me get Ben's thoughts there. And I mean, ultimately, earlier we heard talk, during China's rise, this meteoric rise we were seeing, that it could potentially replace the United States as this world economic superpower, and that the dynamics, again, of the global South could get it to that point. I mean, is that overly overstating the power of China's economy, or do you see it to that end?
Well, it depends what you mean by the dominant power. China has made it very clear. Chinese diplomats have repeated that they do not want to replace the US as the global hegemon. They are seeking a multipolar world. And if you look at China's role in international organizations, it's always very clear not to portray itself as the kind of new dominant power. It's working in alliance and partnership with many other developing countries. But in terms of China's economic power, I mean, it's just indisputable that China is the world's leading economy. Not only because, according to IMF data, China's had the largest GDP measured at purchasing power parity since 2017, larger than the US. But it's not even just about GDP. I mean, because if you look at US GDP, 22% of it comes from the FIRE sector, finance, insurance, and real estate. 17% is from healthcare, right? It spends the most on healthcare out of all the OECD countries and has some of the worst results. So you can spend a lot of money on the financial sector and on healthcare. It doesn't mean that you have a very good economy that benefits average people. Whereas if you look at China's manufacturing capabilities, I mean, China alone is responsible for 35% of the gross output of manufacturing products in the world, which is more than double the US, nearly triple the US. So, I mean, China has become the major economic power. It's the largest trading partner of more than 120 countries. And you raise a really good question about how, with the change in globalization, the kind of rerouting of different trade patterns, what the future could look like. And I think actually we should look at China's industrial policy now and what China calls the 3 new industries, which it's prioritizing. The three new industries are new energy vehicles, that is electric vehicles, also batteries. So not just, we know about lithium ion batteries, but they're experimenting with many other forms of batteries technology, and also solar panels. China has been producing this technology and innovating to such a degree that now solar panels are the cheapest form of energy. And this is a game changer, especially for many developing countries that are dependent on importing oil and gas, which mean that they chronically have to get access to dollars, to hard currency. So they're chronically facing current account deficits and inflation crises, and they have to go to the IMF for a bailout. So if they can reduce their dependency on importing oil and gas by importing a lot of cheap Chinese solar panels that obviously are much more long-term than oil and gas, this could fundamentally transform the economy of many of these countries, help them balance their trade, and help them move toward industrialization. Because a lot of countries in the global south have an energy deficit because they're so reliant on importing oil and gas from abroad. If they can import a lot of cheap solar panels and batteries to store this energy and wind turbines, they can actually industrialize. We've seen that in Africa and parts of Latin America, they are developing industry, which is very important to develop and lift themselves out of poverty.
Okay, Ben, that will have to be the final word. Unfortunately, we're completely out of time for this edition of the Newsmakers, so I'd like to thank all three of my panelists sincerely so much for being with us. Our viewers, of course, for joining us as well. Remember, you can follow us on X, and do be sure to subscribe to our YouTube channel. I'm Andrea Sankey. We'll see you next time.